In the last video a month and a half ago, I said that despite the huge correction, I don't buy Pypl shares at the price of 185 and told why. Now we have received an even bigger drop and the price is already $124. Therefore, I decided to repeat the analysis, see what has changed and understand whether it's time to buy and how justify the prices now. After a long fall, we see a sharp increase, which is associated with the company's report. It immediately catches the eyes that the relative strength index has fallen into the oversold zone. We got the first argument to buy. We also see that the price has moved even further away from the 200-day moving average and has approached the price level that was exactly 2 years ago. This is the second argument to buy, but we look further. 28 out of 38 or 73.6% of analysts see a purchase here. The average expected price in a year is $192, which is 52% higher than the current one. In general, the mood of analysts is slightly above average, which reflects the smart score from Pypl, which is 6 out of 10. The level of financial strength of the company is 5 out of 10. The level of profitability is 8 out of 10. Although the forward price to earning ratio shows overbought, it is no longer too critical. Before this collapse, it was 34 and now it is 26. Despite the fall, most indicators still show overbought. The GF value indicator shows that the price has fallen deep into the green zone. This means that the current price is below fair. The growth rate is 7 out of 10. As you can see, the estimated revenue growth for the next 5 years was about 19% per year, but after the last report, it can be assumed that the annual expected growth will be around 15%. According to technical analysis, everything is pretty clear. Even before the last collapse since October last year, that is for the last 4 months, we have seen a gradual decline in the price in the green zone. Since November, we have seen that a set of technical indicators began to show buy signals. There is both a blue area and a red area, as well as large and small green dots. All this indicated a purchase. Purchases among major players have also increased since November. After the report, the price fell even below the green zone. Even in my last analysis a month and a half ago, the purchase did not look so terrible, although it did not look attractive to me. But now, when the price has fallen by another 33%, I can confidently say that all the sales that are happening now and abroad are completely unjustified. The report is not terrible, although it did not meet expectation at little, so it makes no sense to sell these shares in the negative now, but it makes sense to average. In general, fundamentally and technically, everything here suggests that the current price, it makes sense to buy these shares right now and not wait for further decline. While I expect growth from other stocks that I hold at the moment, perhaps by the time of profit taking, Pypl shares will have already grown and will not be so attractive to me. If the price remains the same or becomes lower, then I will definitely buy Pypl. I will only add that even buying now, there is no point in waiting for a very large growth. I will only add that even buying now, there is no point in waiting for a very large growth, since further growth in the company's profit is expected to be moderate. Thanks for watching. See ya.